15 minutes. On that note, let's bring in former Goldman Sachs partner Peter Kiernan. And Peter, you are the author of American Mojo. You also wrote a best-selling novel about China that I was told I can't say the name of it on air. But essentially, it felt like that you were arguing for a while that China was eating our lunch, so to speak. Is this sort of a reversal of things, or is just China mismanaged themselves?
Well, I think that it's more the latter. If you look how China differs from our market, it really tells the whole story. There are about 90 million accounts in China. Now, what does that mean? Well, it means that, for instance, there are only 88 million people in China in the Communist Party. So everybody in China is investing. 30% of the college students are investing in stocks in China.
Right.
So if you have a market that's mostly individuals, you have to behave differently. And a lot of what China's trying to do is to repair their middle class. When you say you have to behave differently, are you saying, who is you? You see, I think if you're in the, first, you can't airbrush the Communist Party out of the market there, no matter how hard people try. This is as much of a controlled circumstance as you can come up with. And what the Chinese government is trying to do is restore some sort of social order, because you have 90 million people who invested. Now, the scariest part...
Well, Peter, let me ask you, why? Why open the markets up to all these people? Why entice them to invest in the market? Now, last month, we were hearing stories of 1.4 million people, new accounts every single week in China, mostly illiterate people buying stocks. Why would the communist government even allow this in the first place, knowing some form of history, knowing that at some point it was going to come to something like this?
Well, it's a great question. First of all, the Shanghai market was only opened in 1990. So this is a relatively immature market. And this is one where when you have winners, when you have a market that's gone up 160% in 12 months, it's hard not to pat yourself on the back.
But what do they get from it, though? Do they get the same thing that the Federal Reserve is trying here, that virtuous cycle? Do people say, wow, I'm up big in the market, I'll go out and buy a car?
You just hit it right on the head. The number one thing they have to worry about is the wealth effect they created. One of the things that China is desperately trying to do is create a middle class, a robust middle class like our own. It's not easy to do. And they tried to shortcut it by pumping up, and you see state media literally pumping up the stock market.
Do you think it's a mistake for them to plow now maybe hundreds of billions, maybe even more, to keep this propped up, or just let it fall? Because that is one of the realities of investing, too, at some point.
Well, the order is only going to come when one thing happens. Of the trillions that have been lost, a lot of it has been borrowed.
Right.
Margins up 400%.
Right.
And so that has to be cleared out.
Okay.
Until you can restore order.
Peter, great books, great stuff. We want to have you back on real soon.
I'll come anytime.
Appreciate it. Thanks a lot.